Hello and welcome to Unacademy, a one-stop destination for all the English medium civil service aspirants. Welcome to Conquer Prelims 2024. This is the third session for the Indian economy. Now, before I start the discussion, couple of important pointers. Many of you have sent a mail to me asking me how is it possible for an UPSC aspirant to read so many articles and remember so many things. My dear, please understand, I cannot expect you to read all the newspaper articles. It's not possible. Beyond one newspaper, every day reading all the other newspapers, it's not possible. So what is the next best other thing that you can do? You can read a magazine where all these articles are covered, or you can attend the sessions that we do on weekly basis where from different newspapers we are covering these articles. So either way, at the end of the day, you should ensure that you should know the information that is required for you to get through the civil services examination. Second thing, the preliminary examination is fast approaching. I'm pretty sure some of you might be shivering already, even though this is summer right now. Now, how do you address this particular issue? Some of you might be very less in terms of confidence. Now, one way to address this particular issue is attend mock test. Try to attempt these particular test papers so that you understand that your preparation is on track, and when you have a look at how you're performing compared to your peers, your competitors, automatically the confidence will improve provided you score well. Now, in that particular scenario, what we are going to do is we have launched Unacademy All India Prelims Mock Test 2024. There will be first paper, GS paper, 9:30 a.m. and CSAT at 2:30 p.m. conducted on 26th May. The question paper will be having questions which are curated by top educators from Unacademy, and once you attend this particular test, whatever is your All India ranking will be provided to you. And just imagine, if your All India ranking is very good, out of thousands of aspirants, lakhs of aspirants who have taken, that will automatically boost your confidence. So please do not miss out. Registration is free. For further details, the mobile number is given. You can use the mobile number. Now, another very important announcement. Even though I've announced this in the first class and the second class, and by the way, this is the third class, many of the students are still asking, by the way, where can they get the PPT that I'm using in the classroom? All you need to do is very simple. There is a QR code which is visible to you right now on the screen. Please take your mobile phone, scan the QR code. You will be taken to the Telegram channel. Please join the Telegram channel. All the PPTs that I'm using will be made available after the class in the Telegram channel. So with this caveat, let me begin the discussion. Question number 1. If the Federal Reserve adopts a dovish monetary policy, which of the following are likely impacts on India? Take 60 seconds, solve it, then I'll start the discussion. Many of you are concerned about what is dovish. I'll have a discussion, don't worry. I'll tell you what is dovish, I'll tell you. Okay, let's start the discussion. Now, whenever you come across the concept or the term related to monetary policy, there are two terms which are used. One is the hawkish monetary policy. Second one is dovish monetary policy. Now, I am reminded of one of the very famous statements given by Mr. Raghuram Rajan, the former RBI governor, who in one of the press conferences mentioned that he is neither hawkish nor he is dovish. Now, what do you mean by the term hawkish and dovish? Please understand, hawkish monetary policy basically means you prefer having higher interest rates. Is it okay? I'll repeat my statement. Hawkish monetary policy basically means you prefer to have higher interest rates. And on the other side, whenever you say, right, the dovish monetary policy, it basically means that you want to reduce interest rates. You want to keep the interest rates lower. Is it okay? Right, so hawkish as well as dovish monetary policy. Done? That is point number one. Point number two, the question is on the Federal Reserve. Right, Federal Reserve. Right, what do you mean by Federal Reserve? Listen to me carefully. Just like we have Reserve Bank of India in India, obviously the name is Reserve Bank of India. The central banker of USA is the Federal Reserve. And the Federal Reserve, in order to either promote the objectives or achieve the objectives, basically either will increase the interest rates or reduce the interest rates, just like RBI does in India. So now the question is, if the Federal Reserve will follow a dovish monetary policy, that is basically reduce the interest rate, what is the likely impact of this policy on India? What is basically the impact of this on India? Listen to me carefully. The US interest rates are very, very important. You may like it, you may not like it. The US interest rates are very, very important. US interest rates are generally having a larger influence in the global market. For example, here, let's say the Federal Reserve will reduce the interest rates. As a result of this, understand this carefully, as a result of lower interest rates in the USA market, what generally happens is, lot of the investments which are there in the USA market will start flowing into other markets. There will be a lot of outflow of the investments from the USA market into other markets. And one such market that they generally find attractive is the Indian market. They find Indian market very, very attractive. Why? Interest rates in India are comparatively higher. For example, a 10-year bond in India will get you a yield rate of somewhere around 7%. And a 10-year treasury bill or treasury bond of government of USA will get you somewhere around 5%. So the interest rates in India are very attractive. Foreign investors will be interested. They will start moving towards the Indian market. Now, as a result of this, what will happen? First point, forex reserves held by RBI are likely to increase. Now, some of you will ask, what is the connection? How? What is the connection? How forex reserves will start increasing? Listen to me carefully. If dollars, that is, let's say foreign investors will bring dollars into India, sell the dollars in the market, purchase the rupees, start investing. Can I simply say in the forex market, dollar supply will be very high? And when the dollar supply increases, there is a danger that there will be huge depreciation of a dollar and uncontrolled appreciation of rupee. And that is where Reserve Bank of India will participate in the market, basically conduct certain transactions, purchase dollars and sell rupees in the market. And have a look at this. That will in fact lead to rising forex reserves held by RBI. First point is clear. Second point, imports will become costlier. No. In this case, if dollar will come into India, supply of dollar increases, dollar will depreciate. Now, what do you mean by dollar depreciating? Very simple. Dollar will start losing value against rupee. Rupee starts appreciating, dollar will depreciate. And when rupee appreciates, please remember this, the imports will become cheaper, exports will become costlier. Is it okay? Imports will become cheaper, exports will become costlier, and here it says imports will become costlier, right? So second one, wrong. Third one, it will be more expensive for the companies to repay their external loans which are taken in dollars. Why I'm writing in terms of dollars, please understand. All of you heard of the term external commercial borrowing? Please do let me know. External commercial borrowing. In case of external commercial borrowing, the Indian companies will borrow from the external market. They will borrow from the external market either in terms of dollars or in terms of rupees. Please remember this. Most of the books simply say in terms of foreign currencies, but with introduction of masala bonds, with introduction of masala bonds, now Indian companies are also allowed to borrow under ECB in terms of rupees. So have a look at this. Imagine you have taken a loan of $1. Think of it. Imagine you have taken a loan of $1 and right now the exchange rate is 60 rupees. Right now the exchange rate is 60 rupees. And now because of this, right, dovish monetary policy, investments will come into India, dollars will come into India. It will lead to rupee appreciation, and rupee appreciation basically means what? It will become $1 is equal to, let's say, 40 rupees. Correct? It will become $1 is equal to 40 rupees. So have a look at this. If you have taken $1 earlier, right, basically to repay $1, you are supposed to pay 60 rupees. You are supposed to pay 60 rupees to get the dollar and repay. Now, if you want to repay the same dollar, imagine today it has matured. You want to repay the same dollar, you will have to pay 40 rupees to get the dollar. All of you okay? You will have to pay 40 rupees to get the dollar. So as a result of this, what will happen? You are basically giving lesser rupees to repay the loan. Is it okay? You are basically giving lesser rupees to repay the loan. All of you okay? Anybody has a doubt? Please do let me know. Rupee appreciates. And when the rupee appreciates, all of you understand the rupee appreciation. Correct? Rupee appreciation. Rupee will appreciate, and as a result of rupee appreciation, what will happen? Right? 60 rupees, instead of paying 60 rupees to get a dollar, now you'll have to pay only 40 rupees. Many of you are saying did not get it. My dear, do you understand the concept of rupee appreciation and rupee depreciation? Dollar supply increases. Done? Dollar supply increases, demand for rupee increases. So when the demand for rupee increases, rupee appreciates. Is it okay? Rupee appreciates, which means for the same amount of dollar, if you want to purchase the dollar in the forex market, now you will have to pay lesser amount of rupees. Lesser amount of rupees. So if you have borrowed $1 from the external market and you want to pay the $1 back, compared to earlier situation, are you paying lesser amount of rupees or not? Is it okay? All of you are able to understand, right? You basically have to get $1. So how many rupees will you pay to get $1? You will pay lesser amount of rupees. So it will be more expensive for the companies to repay their external loans. No, it will be lesser. All of you okay? Can we go forward now? Can we go forward? Right? So first one is correct, third one is correct. Right option for this question will be option B. Can we go forward? Okay. Next one. Number 3 is wrong too. Why, my dear? Why? Why number 3 is wrong? Aditi, please do let me know why number 3 is wrong. In terms of rupees, you will get the dollars at lesser money now. You will get the dollar at lesser rupee. Right? So you will pay lesser amount of rupees. Okay, question number 2. Let's start. Consider the following statements regarding GST Council. The poll has started. Start now. Okay, let's start. Many of you are having a doubt regarding first question. I'll go back, don't worry. Let's look at the first question. Consider the following statements regarding the GST Council. It is a constitutional body set up under Article 280 of Indian Constitution. Straightforward. This is wrong. Why? It is set up under Article 279A. Okay. Second, the Vice President of the Council is to be selected periodically from the members of the Council. Right, from the members of the Council, selected periodically. No, right? This is wrong. Why? The vice president needs to be elected. And by the way, please understand, the vice president is not there in the GST Council right now. There is no vice president of the GST Council. Right? Third one, the decisions of the council are to be taken. And by the way, many of you will say, sir, is it vice president? Please understand, it is actually vice chairperson. Okay, it is actually vice chairperson. Chairperson is the finance minister. Vice chairperson should be elected, not selected, should be elected. Right? There is no election that has happened for vice chairperson. The decision of the GST Council are to be taken by the simple majority of the votes. No, right? Either it is supposed to be taken through consensus or 75% of present and voting. 75% of present and voting. Fourth one, if a proposal is not decided in a meeting, then it lapses. If a proposal has been put forward by, let's say, one of the ministers, if it is discussed and no voting is done, or if it is not taken up by further discussion itself, so please understand, it is not lapsing, it doesn't lapse, it will continue in the next meeting. In the next meeting, it will be taken up. Okay, so first one is wrong, second one is wrong, third one is wrong, and fourth one is wrong. Done? Right? Fayaz says, why did you write vice president? My dear, anyways, the statement is wrong. There is no vice president in the GST Council. There is no vice president in the GST Council. There is supposed to be a vice chairperson or the chairman. Right? Anyways, that statement is wrong. So all the four statements are wrong. Right option will be option D, none of the statements. Now, many of you are saying, please recheck the question mark. Let's have a look at this. In the Federal Reserve, or if the Federal Reserve adopts the dovish monetary policy, which of the following are likely impacts on India? Okay, third statement. Most of you are focused on third statement. It will be more expensive for the companies to repay their external loans. Now, all of you will agree when I say, with dovish monetary policy, there will be rupee appreciation in India. At least on that particular point, all of us have consensus. We don't require voting for that. All of us have consensus regarding that. With dovish monetary policy there, right, there will be rupee appreciation here. Correct? Okay, rupee appreciation. Now, if rupee appreciates, let's say before this dovish monetary policy is done, before the monetary policy is done, let's say exchange rate is $1 is equal to 60 rupees. Okay, let's say exchange rate is $1 is equal to 60 rupees. Done. Now, you have taken $1 loan. Is it okay? Let's say you have taken $1 loan. Is it okay? So far so good, you have taken $1 loan. Now, the monetary policy is announced there. As a result of that, dollar will flow into India. Dollars will flow into India. And as a result of this, rupee will appreciate. From $1 is equal to 60 rupees, now this will become $1 is equal to, let's say, 40 rupees. So far so good, right? $1 will become equal to 40 rupees. Now let's say your loan matures. Let's say your loan matures. Now you tell me, when your loan matures, you require $1. Anybody has a problem? You will require $1 to repay. And when you require $1 to repay, you will go to the forex market. How much rupees will you pay now? Is it okay? Right? How much rupees will you be paying? You will be paying lesser amount of rupees. Is my argument okay? When you took a loan, you took it at 60 rupees. And basically you took 60 rupees. Now you are about to repay at 40 rupees. And please understand, this is not difficult. If rupee depreciates, will your payment increase or not? If you're finding this difficult, forget about this. Forget about this. Let's replace this with, let's say, a product. Imagine you've imported this. Tell me now, okay? Imagine you have imported this particular product. If rupee depreciates, will you pay more money for this or not? Even though the market price in the international market is the international market price is $1. You tell me. Right? Tell me, will you pay more amount of rupees with rupee depreciation or not? Correct? Right? But on the other side, if rupee appreciates, right, what will happen? you will basically pay lesser amount of rupees for the same dollar. Lesser amount of rupees for the same dollar. Is it okay? But again, some of you are saying, will it be, are you paying more dollars or less dollars? My dear, in terms of, okay, I'm talking in terms of rupees. In terms of rupees, are you paying lesser amount of money or more amount of money? Is it okay? Are you paying lesser amount of money or more amount of money? And even, have you read about external commercial borrowing? Right, have you read about, right, some of you are saying the statement explanation is correct, but marking is wrong. Correct, okay. It will become more expensive for the companies to repay their external loans. Okay, wrong. I agree. Okay, this is what you're pointing out. I thought my explanation was wrong. I understood, marking was wrong. Okay, so second is wrong, third is wrong. Right option should be option A. Is it okay? Now, whenever you are pointing out something to me, right, whenever you're pointing out something to me, please tell me whether explanation is wrong or marking is wrong. Is it okay? Right, whether explanation is wrong or marking is wrong. Most of you are saying, right, explanation is wrong, so I was continuously explaining the same thing again and again. Okay, finally, all of us will have consensus. The first question, right option will be option A. Is it okay? All of us have consensus now? Okay, let me go to question number 3. Okay, question number 3. With the increased risk weightage by RBI on unsecured loans, which of the following is likely to happen? Okay, take 60 seconds, solve it. There is a connection to current affairs, right? I'll explain it later. Astitva Shukla, I'll explain that, don't worry. What is the difference between Masala bond and Maharaja bond? Right, from where did you get this idea of Maharaja bond? Masala bond is very famous. By the way, this question is very easy. Right, very easy, don't confuse this. Okay, let's start. This question is very easy, by the way. Okay, and by the way, this was there in the newspaper, in Hindu newspaper, in all the other newspapers in the last, right, let's say 3 to 4 months. With the increased risk weightage by RBI on unsecured loans, which of the following is likely to happen? Which of the following is, right, likely to happen? Now, please understand, whenever you talk about the loans given by the banks, they can be secured, they can be unsecured or unsecured as well. Secured, unsecured. Secured means loans will carry certain collateral. Unsecured means loans do not carry any kind of a collateral. Point number 1. Point number 2, there's a concept of Basel guidelines. Is it okay? There is a concept of Basel guidelines. Under Basel guidelines, there is the idea of a capital adequacy ratio. And when you read about capital adequacy ratio, you will come across a concept called as risk weightage. There is this concept of risk weightage. What is this idea for risk weightage? Whenever the banks will provide certain loans or invest in the market, etc., all these, right, let's say investments and loans will carry certain risk weightage. Now, Reserve Bank of India in the last 1 year, especially in the last 1 year, has been telling the banks, has been warning NBFCs that lot of loans are being issued which are unsecured. The banks as well as NBFCs are issuing lot of these loans which are unsecured in nature. And what is the problem with unsecured loans? When you provide lot of loans which are unsecured, if the borrowers start defaulting, if the borrowers will start defaulting, and if let's say there is a recession in the market where the NPAs will start increasing, that will lead to lot of losses being incurred by the banking sector. And to address this particular issue, to curb the issuance of more of these unsecured loans, RBI increased the risk weightage asset. RBI increased the risk weightage asset for many of these unsecured loans. For example, banks will provide loans to NBFCs. RBI increase the risk weightage to the loans which are given by the banks to NBFCs. Banks will issue credit card to you. Credit card is also a concept of a loan only. On this credit card issuance also, Reserve Bank of India increase the risk weightage. So, as a result of this, what is expected to happen? If risk weightage is increased, what will happen? Point number one, if risk weightage is increased, banks will have to keep more capital. Remember this, banks will have to keep more capital in case the losses will incur to absorb the losses. So first one, more loans will be issued? No. Banks will keep more capital, and because they are keeping more of a capital, simply like this, idle capital like this, now they will start charging higher rate of interest. They want to cover for extra capital. They will start charging higher rate of interest. Expectation is loans issued will become lesser. Not more loans, loans issued will become lesser. First point is wrong. All of you okay? First point is wrong. Second one, interest rates on the loans is likely to go up. Yes. If you are a bank, if you are keeping more capital for this loan, you will start charging higher rate of interest on this. Yes, second statement is correct. The NBFCs will be able to get easy access to credit from the banking sector. No, this is not likely to happen. The NBFCs are expected to get lesser amount of loans or get access to lower credit from the banking sector. So third statement is wrong. So second one is right, remaining two are wrong. Right option for question number 3 will be option A. Option A will be the right one. Okay, can we go forward now? Can we go forward? Question number 4. Take up question number 4. Which of the following are likely outcomes of evergreening of loans? Again, lot of discussion has happened regarding evergreening in the current affairs. Start solving. Hosanna, you are inhuman to us. Why, my dear? Why? Do let me know. Gandhish, risk weightage is a theoretical concept to classify instruments based on ability to pay. No, it's not a theoretical concept per se. According to guidelines, we are supposed to classify the loans based on the risk that is associated with repayment. Okay? Done? Can we start now? Can we start? Okay, question number 4. Which of the following are likely the outcomes of evergreening of loans? Sir, any connection to current affairs? Is there any discussion, right, to current affairs? Yes. Very recently, there was a discussion regarding evergreening possibility of loans in the Bandhan Bank. In the Bandhan Bank, RBI has basically started investigation, has launched investigation or audit into the Bandhan Bank activity. That is basically regarding the evergreening of loans. Now, what is this idea of evergreening of the loans? Let's start. Imagine here is a bank. Let's say you are the bank manager. Okay, you are the bank manager. You are giving a loan to me. You will give a loan to me. Now, generally, I will repay the loans. But what happens because of either external factors or internal factors, whatever could be the reasons, I am not in a position to repay the loan. Is it okay? I am not in a position to repay the loan. I am not able to repay the loan. As a result of this, this account of mine will become NPA. Correct? This account will become an NPA, non-performing asset. You will take me to insolvency and bankruptcy court. Assuming I'm a company, you will take me to NCLT, file an application. But rather than this, what you will do is, you will issue one more loan to me. Listen to me carefully. I have not paid the earlier loan. I'm yet to repay the earlier loan. But now what you will do is, you will issue one more loan to me. I will use the money in the new loan to repay the old loan. Is it okay? I'll take your loan, new loan, I will take this, right, and use the money to repay the old loan. This is called as evergreening. Is it okay? This is called as evergreening. Now please be very careful. Please be very careful. Why? These kind of terms look very similar in the UPSC examination. Why? In the context of ecology and environment, there is this particular concept of greenwashing. Correct? There is this particular concept of greenwashing. Now suddenly in UPSC they might ask you evergreening. You will think of greenwashing, and they will ask you a question about greenwashing, and you will be thinking of evergreening. Both are different, so please be very careful. Right? Please be very careful. Now come back to the discussion here. This is called as evergreening. Now what is the problem? If there is evergreening, what is the problem? First one, the banks will not be able to disclose, or the banks will not be correctly disclosing what is the quality of all of its assets. Is it okay? I'll repeat my statement. The bank will not be disclosing what is the right quality of all of its assets. And by the way, assets are nothing but the loans of the bank. The loans of the banks are nothing but assets. By giving one more loan to me, this loan will not be classified as NPA. And because it has not been classified as a NPA, you are not disclosing the right quality of the assets. That is the first one. Second one, if you are not declaring the right quality of the assets, RBI will also not be coming to know, whether should any restriction be imposed on you, should any penalty be imposed on you, should you be allowed to continue to give loans, or you should be stopped from giving loans, etc. Third one, lower provisioning of the loans by the banks. Provisioning basically means you will have to provide certain amount of money. You will have to keep aside certain amount of money. In case of losses, you will use the money to absorb it. That is basically called as provisioning. Now think of it. If you do not declare this account as an NPA, the number of NPAs will not be very high. NPAs will not be increasing. And if NPA doesn't increase, your provisioning, your provisioning for the banks or provisioning for the bad loans will also become lower. All of you okay with this? First one is correct. Question number 4. Point 1 is correct. Bank will be able to mask the stress faced by the bank. Yes. Second point is also correct. Mask means hide. I hope you understand. Mask means hide. Okay. Third one, will prolong existence of zombie firms. Now many of you asked me, sir, what do you mean by zombie firms? Please understand. Zombie firm basically means those companies which are generating sufficient amount of money just to sustain its activity. That's it. Just to sustain its activities. It has got so much of existing loan. It is not able to repay it. It is generating sufficient amount of money to just sustain the activities. That's it. These are called as zombie firms. Is it okay? So will prolong the existence of the zombie firms? Yes, that is also a possibility because of evergreening of the loans. Done? So all the 3 are correct. Right option for the question number 4 will be option C. All the 3 are correct. Sir, what is greenwashing? My dear, in the context of ecology and environment, greenwashing means you will issue certain instruments in the market, raise money with the pretext of using for environment friendly projects. You want to basically raise the funds and tell them that you are raising the funds for ecological friendly projects, but you will not be using for that. You will be classifying certain projects as ecologically friendly projects. That is basically called as greenwashing. Explain the first statement. Listen to me carefully. Please listen to me carefully. Imagine this. A bank has given loan to a company. Company doesn't repay the loan. NPA becomes higher. Correct? NPA becomes higher. If NPA becomes higher, the bank is now worried about larger number of losses, higher amount of losses. And because it is expecting higher amount of losses, basically what it has to keep? It has to keep more provisions. All of you okay? It has to keep more amount of money to absorb these losses. This is provisioning. But if I'm not classifying this NPA as an NPA because of evergreening, is it okay? If I do not classify this as an NPA, then in that particular case, the NPAs will not increase. If NPAs do not increase, my provisioning will also be not higher, it will be lower. Done. So all the 3 are correct. Right option is option C. Let me go to question number 5 now. Let me go to question number 5. Consider the following statements regarding e-Rupee. E-Rupee. Okay. Okay, let's start. Let's start the discussion. Question number 5. Consider the following statements regarding e-Rupee. Now please understand. Again, when I say e-Rupee, there are two systems of e-Rupee. Be very careful. One is this e-Rupee, which is basically a voucher system. This is basically a voucher system. This has been developed by NPCI. It's a voucher system, digital voucher system. And the second one is another e-Rupee, right? Another e-Rupee. That's the reason I'm saying please read very carefully when you're reading the questions. Please read very carefully. The second one is e-Rupee. This e-Rupee is nothing but central bank digital currency. CBDC, central bank digital currency. So this is regarding a digital voucher. e-Rupee is nothing but a digital voucher here. So let's start. Only the banks are allowed to issue these in India. Until very recently, this was true. I hope you understand. Until very recently, this was true. But last year, in one of the monetary policies, the Reserve Bank of India's governor announced that no, we are going to allow even the NBFCs, PPIs, etc. to issue e-Rupee now. Is it okay? Right, the Reserve Bank of India's governor announced that we will allow other entities also apart from the bank to issue the digital vouchers now. Digital vouchers. Is it okay? The first statement, wrong. Only the banks are allowed? No. Second one, purpose specific e-Rupee is allowed to be issued only on the behalf of the central government. This is also wrong. Why? Purpose specific e-Rupee vouchers are being allowed to be issued for central government schemes, state government schemes, as well as private sector. For private sector initiatives. Even the private sector is allowed to use the e-Rupee initiative, right? RBI governor himself in the statement has told this. Second statement, wrong. The beneficiary must have a bank account in order to use e-Rupee. Now, please understand, the beneficiary need not have a bank account. Bank account is absolutely not required in case of the e-Rupee voucher. Why? e-Rupee is basically a QR code. I hope you understand, right? Jayant, my dear, listen to me. e-Rupee is a QR code. That is, the government wants to provide. Government wants to provide certain, let's say, certain welfare to you. Now, what they will do is, rather than giving money or transferring money into your account, rather than spending money and providing services directly to the government, directly through the government initiatives, what government will do is they will send a QR code. Take the QR code, right? Go to the service provider, show the QR code, and the services will be provided to you. Is it okay? Is it okay? Right? So, beneficiary must have a bank account. No, you need to have a mobile phone. You need to have a mobile phone, receive the QR code, receive the SMS, you can get the access to the welfare as such. So, third statement is also wrong. Right option for the question number 5 will be option D. All of you okay? Right option for the question number 5 will be option D. Let me go to question number 6 now. Fayaz, no sir, it's mandatory. I have read multiple times this topic. Why it's wrong statement? My dear, for voucher, you require basically a mobile phone. For voucher, right, you require a mobile phone. That's it. Right, nothing else is required. Okay, so question number 6. Consider the following statements regarding e-Rupee. Now this is CBDC, central bank digital currency, right? Be very careful. This is CBDC. Start. Same question. My dear, it's not the same question. Some of you are saying same question. Then you did not listen to me what I said 5 minutes ago. Okay? Ranjit, do videos on agriculture, service sector, industries. My dear, patience. I have one class tomorrow, and again day after tomorrow I have one more class. Day after tomorrow will be a marathon session, and so attend. We'll have a discussion about all of these particular areas, current affairs. Let's start. Consider the following statements regarding e-Rupee, that is central bank digital currency. I'm talking about digital rupee now, digital rupee. It is a legal tender. I just look at the comments. Some of the students commented that it is not a legal tender. My dear, what is this digital rupee? What is the concept of digital currency? Rather than having 100 rupee note in your hand, right? I hope you understand. Right, your friend is back. Rather than having this particular 100 rupee physical hard copy in my hand, I will have a wallet. Now this 100 rupee in a digital form will be put in my wallet. That's it. That's it, nothing else. Right, the 100 rupee, the digital copy of that will be credited. It will be kept in my wallet. I'll have to have a wallet for this. Right, that is basically the concept of a CBDC. And what is the benefit of CBDC? RBI says, if I have this particular concept of CBDC, I don't have to print money. I hope you understand this. RBI doesn't have to print money if all of us shift to CBDC. And that is not going to happen very soon, by the way. If all of us start using CBDC, RBI's printing expenditure will automatically come down. The headache of exchanging notes will start coming down, etc. Now, some of you will have this doubt. Let me take 1 minute to explain this. Some of you will have this particular doubt. Sir, already we have UPI. Then why do we require CBDC? I'm pretty sure, may not be now, but later or earlier. We already have UPI, and I'm using UPI left, right and center every day, in and out. Wherever I'm using this particular transaction, I'm using UPI only. RBI simply says, listen to me carefully. RBI says, RBI कहता है that UPI, to use UPI, you require a bank account. Correct? To use UPI, you require a bank account. Bank is a mediator. Bank has to be involved in the UPI. Whereas in case of CBDC, bank is not required. You will simply have money in your wallet. You will simply transfer. You will receive money in the wallet. Bank is not required. That is one very important difference. And second very important difference, some of you will simply say, in that case, I'll jump to CBDC. I'll keep all of my money in CBDC. Be very careful. Right? Some of you will say, sir, in that case, I will transfer all of my money and keep it under CBDC only. Central bank digital currency. To those who are asking the long form. Be very careful. Don't do that as well. Why? If you keep all of your money in digital format like this, you will basically, right, remove all of your money from your savings bank account or your FD, you will break it. My dear, CBDC will not get you any interest. CBDC will not fetch you any kind of interest. Absolutely no interest. In case of your SB account, at least you will earn 3.5%. At least you will earn 4% in some of the banks. So in case of CBDC, no interest is paid. In case of bank account, there will be interest. Of course, even 4% interest when inflation rate is 5%, you are not earning anything. You are actually losing money. But if you transfer everything into CBDC, then your interest earnings because of inflation will be minus 5%, assuming inflation rate is 5%. So I hope you understand. Don't do that. Listen carefully. It is a legal tender. Yes, it is a legal tender. Please understand. It's a legal tender. Right? What do you mean by legal tender? The money that has been notified by the government of India for settlement of debt. Is it okay? The money that is used or notified by the government of India, which is used for the settlement of debt, it is called as a legal tender. Okay? It is a legal tender. The transactions can be P2P and P2M. Person to person, person to merchant. At person to person, person to merchant. Yes. If I have this wallet, can I transfer money to your wallet? That is digital rupee? Yes, it is allowed. If I have the money in my digital wallet and if I purchase something from your shop, assuming you have, let's say, a very large shop, can I transfer into your wallet? Again, answer is yes. Right? Person to person, peer to peer. They will also say peer to peer. And person to merchant. Both are allowed. Third one. The receiver to accept the e-Rupee must have the bank account. Absolutely no. Please remember, slightly tricky. No bank account is required. If you are receiving this, all you require is a wallet. All you simply require is a digital wallet. Is it okay? Right? So first one is correct, second one is correct. Question number 6, right option will be option B. Can we go forward? Can we go forward? And by the way, please remember, CBDC is a decentralized. I'm sorry, CBDC is following blockchain, not decentralized. CBDC follows blockchain, right? The Bitcoin is decentralized, cryptos are decentralized, etc. Okay. Let me go to question number 7 now. Consider the following statements regarding IMPS, immediate payment service, right? IMPS, transfer. Let's start. Ashwin, my dear, I'll cover those particular curves. Maybe day after tomorrow, please attend the class. Marathon session, please attend that particular session. I'll cover some of the questions on these curves. Saujanya, P to M, that is person to merchant, okay. Does e-Rupee use blockchain technology? Yes, e-Rupee uses blockchain technology, by the way. Okay, let's start. Okay. Question number 7. Consider the following statements regarding IMPS. Okay. Now first one, the maximum amount under IMPS to be transferred is 5, right? 5, it should have been 5 lakh. Anyways, statement is wrong. Is 5 lakh per transaction, the same as NEFT. That statement 1 anyways is wrong. The actual amount is 5 lakh rupees, right? Even if I had written 5 lakh rupees, statement would still be wrong. Why? Right, per transaction, the same as NEFT, right? Anybody can tell me what is the maximum amount allowed in case of NEFT? Maximum allowed amount, right? NEFT, maximum amount in NEFT is, there is no limit. Please remember, there is no limit, absolutely no limit under NEFT. Some of you are saying 2 lakh rupees. My dear, 2 lakh rupees is the minimum amount for RTGS. Is it okay? Right? Anyways, the statement is wrong. Don't worry. Anyways, the statement is wrong. NEFT maximum amount is, right, there is no limit. RTGS minimum amount is 2 lakh rupees. Minimum amount is 2 lakh rupees. Is it okay? So first statement wrong. First statement is wrong. Second one, IMPS can be used to receive the foreign remittances as well. Correct. Please understand. The IMPS can be used to receive the foreign remittances as well. This is absolutely correct. Whenever you receive foreign remittances, they will use a term called as FIR. Suddenly in UPSC, they will throw this particular term in the context of economics, FIR, foreign inward remittances. FIR stands for foreign inward remittances, not first information report. In context of economics, it is different. Foreign inward remittances. So in case of FIR, there are two parts, or they will simply say 2 legs of transaction. One of the legs of the transaction, you can use IMPS to receive the FIR. So second statement is right. And some of you are asking, what is the full form of NEFT? National Electronic Fund Transfer. IMPS is developed by NPCI. That statement is correct. Absolutely correct. IMPS has been developed by NPCI, right? National Payments Corporation of India. Now, has anyone thought, think of this now, has anyone thought, what is the need for IMPS when we have NEFT as well as RTGS? Just think of it. What is the need for having, right, the idea for IMPS when we already have NEFT as well as RTGS? Now, please understand this carefully. Earlier, NEFT and RTGS were not available throughout the year. That is 24/7 were not available. Is it okay? For example, NEFT. In case of NEFT, you can do it now, but it will take certain point. It will take certain time. Whereas IMPS, the money will be transferred, the funds will be transferred very quickly like this. So within couple of seconds, the funds will get transferred, payment will happen very quickly. Done. So that is the reason over a period of time, we have a NEFT, we have RTGS, they were present earlier also, but NPC have felt that we should have one more type of a system where money can be transferred at any point of time and the time required would be very, very lesser. And that's the reason IMPS was developed and implemented. So second and third are correct. Question number 7, right option will be option B. Done. Can we go forward now? Right, so the reason that I've asked this particular question is, I'm pretty sure all of you heard of this, CBI conducted a raid at UCO Bank, right? Certain people who are involved in the UCO Bank, CBI conducted raids in these particular premises, and that was again related to IMPS transactions, IMPS transactions itself. That's the reason suddenly UPSC can ask you question on CBS, core banking solution. Very recently it was there in the context of Kotak Mahindra. They can ask you question on IMPS, immediate payment services or immediate payment settlement, right? That was there in the context of UCO Bank, etc., etc. Done, right? Now many of you are asking what is the full form of IMPS? Immediate payment service, immediate payment services, IMPS. Okay, dream labasna, is it okay? Now let me go to question number 8. Let me go to question number 8. Consider the following pairs. There are 3 sections that I have written on one side. Right, what is the relation to? I've written on the other side. Take time, 60 seconds. Tell me what is the right option. RBI Act. If I'm asking about RBI, okay, I have not written RBI Act. RBI Act of 1934. One of the students says a tasteless question. I'll connect it to current affairs. Don't worry, I'll connect it to current affairs. Factual question? Yes, factual question. Okay, let's start. Consider the following pairs, right, again under RBI Act of 1934. There are 3 sections I've given: section 22, section 21, section 47. And what is the relation? I've given 3 options on the other side. Now why this question has been asked? Is there any connection? Is there any connection to current affairs? Or simply I've asked? Reason is very simple, my dear. The section 47 is very often cited in the newspaper. For example, in the last 1 week itself, this idea of a section 47 was actually mentioned. Section 47 talks about surplus transfer. Please remember, this is correctly matched. Section 47 is basically talking about surplus transfer. What do you mean by surplus transfer? RBI will incur expenditure, will earn income, correct? RBI will incur expenditure, earn income. Whatever is the excess income, rather than calling this as a profit, we will call this as a surplus. And part of the surplus, we will take it, give it to Government of India. Remaining, it will be left with Reserve Bank of India. And this formula that we are using as to how much should be given to government, how much should be left with RBI, it is based on a committee called as Bimal Jalan Committee. Bimal Jalan Committee. Please by heart this. Please remember that. It was a very important committee. So far, UPSC has not asked a question on that. It has not asked a question on that. Please be very, very careful. Now that is associated with section 7. And please do me a favor. After the class is over, type section 47 in the Google, go to the news and please do check, was it there in the current affairs in the last 2 months, last 3 months, in the last 1.5 years. Second one is section 22 and section 21. Basically, I have flipped them. I have changed. Okay, section 21 talks about public debt. In fact, I had asked this question yesterday also. Public debt of Government of India is mentioned with Reserve Bank of India. And it seems that, right, it seems that while telling this, right, I've made some mistake there. By mistake, I told that the external debt is maintained by External Affairs Ministry. No, it's not maintained by External Affairs Ministry, right? I'll correct it. It is maintained by Finance Ministry, right? By the Finance Ministry. Internal debt with Reserve Bank of India, external debt with the Finance Ministry. Okay. So section 21, it is associated with the public debt. Section 22 is associated with currency notes. Now do let me know, is there a probability of question being asked on the concept of section 22 under RBI Act? Why? Concept of 2000 rupee note, correct? Concept of 2000 rupee notes, right? Very recently, that is in the last 1 year, Reserve Bank of India announced that they will be withdrawing, right? They'll be withdrawing this particular 2000 rupee note because it was introduced post 2016 for basically achieving certain objective. What was the objective? Government in 2016 withdrew the 500 rupee note as well as the 1000 rupee note, demonetized those currency notes, and there was a lot of vacuum. There was a lacuna in the system. To fill that particular vacuum, RBI says we printed the 2000 rupee note and we supplied it, and now sufficient amount of money supply is there in the economy. I hope you understand. RBI says sufficient amount of money supply is there in the economy, hence we don't require the 2000 rupee currency notes, we will withdraw them. And all of that was associated with the concept of section 22 itself. Okay. So if you ask me, sir, any other articles or any other sections are important from RBI Act, I would be very careful. I would try to remember these particular sections. Again, many more sections are there. But as far as I am concerned, these are the most important sections from the Reserve Bank of India Act. Please be very careful. Questions can be picked up from any of these particular, right, let's say the sections. Okay. Now let me go to question number 9. And by the way, right, sir, what was the answer? Right, first one is wrongly paid, second one is wrongly paid. Right option for this question number 8 will be option A. Option A. Okay. Next, question number 9. Consider the following statements regarding SFBs. Start. Sir, is it necessary to go through all these sections of RBI? I would recommend you go through. As Sonu Kumar says, it is not going to come in the exam, right? If it doesn't come, I'll be happy. Workload for you would have been much lesser. But the way UPSC is going, you cannot simply predict and right, simply say nothing of this sort will come. UPSC can do that. UPSC can very well do that. CAR full form, capital adequacy ratio. Capital adequacy ratio. Okay, let's start. Right, before I start, I just want to give you one example. There's a concept of MSP, minimum support price. Earlier, we never thought that the UPSC will ask you questions on the food grains which are covered under MSP. Suddenly, UPSC has started asking that. I hope you understand. Suddenly, UPSC has started asking that particular question. So that is the reason. Be very careful. Consider the following statements regarding small finance banks. These will have to maintain a capital adequacy ratio or capital to risk weighted assets ratio of 9%. Statement is wrong. Be very careful. Small finance banks are there in the current affairs. They are present in the current affairs for the last 1 year. These will have to maintain a capital adequacy ratio or CRAR of 9%. No, they will have to maintain 15%. Please remember. Right, look at the RBI guidelines. They will have to maintain 15%, 15%. The payment banks will have to maintain 15%. Small finance banks will have to maintain 15%. So first statement is wrong. The PSL requirement for the SFBs is 75%. This is straightforward. Correct, right? The PSL requirement for the SFBs is 75%. Yes, right, factual statement. The depositors in these banks will have a deposit insurance of up to 5 lakh rupees. 5 lakh rupees. Yes. Right. Just to create that particular element of confusion, I've given this. Why? Suddenly you'll feel, okay, is there any reason why this particular kind of a statement is given? Is there any reason why there is this kind of a statement is given? Depositors in these particular banks will have a deposit insurance. Any bank, I hope you understand, any bank, the depositor will have 5 lakh rupee insurance, up to 5 lakh rupees. And please remember this, right? This insurance is provided by DICGC, Deposit Insurance Credit Guarantee Corporation. It was there in the newspaper. Is it okay? So third statement is correct, second statement is correct, first statement is wrong. Okay, so right option for question number 9 will be option B. Option B is the right option. Done? But SFBs or SCB, then it should be 9%. My dear, please understand. The scheduled commercial banks, they are supposed to maintain 9%, right? But look at that, the public sector banks have been asked to maintain more than 9%. Check it. Public sector banks have been asked to maintain more than 9%. How much? 12%. The payment banks have been asked to maintain more than 9%. How much? 15%. Please check the details from RBI. Please go to RBI website and check it, or else all you need to do is simply go to Google and type what is the capital adequacy ratio requirement for small finance bank. Do that. Right? Please check it. Please check it online. Right? And there is a very funny statement regarding Google. Google will give you the answers to the questions for which even the God will not give the answer to you. Go to Google, type it, you will get the answer. Is it okay? Right, so question number 9, the right option will be option B, only 2 are correct. Right, so the reason that I've asked is, in the last 1 year, SFBs are there in the newspaper multiple times, and very recently also. Right, very recently also, right, the Reserve Bank of India have given certain conditions as to what should be the path followed by these particular SFBs to become universal banks, to get the license of universal banks. That is the precise reason why I have given this question. Okay, next one. Question number 10. Consider the following statements regarding NDS-OM. Right, solve it. I will give you the answer after 60 seconds. And by the way, Minerva Mills, right, the username is Minerva Mills. My dear, the student said, but sir, Google says 8% is capital adequacy ratio. Please listen to me. The 8% is according to the Basel guidelines. 8% is according to Basel guidelines. Can RBI change it? Can RBI vary that? Definitely yes, it has the power. That is the reason in case of India, we will maintain more than 8%, 9%. Okay, others also, you be very careful. Be very careful. Suddenly you will type in Google, you will get 8%. You will jump and say faculty is wrong. That's the reason. Okay. Question number 10, solve it. Charan, payment banks do not give loans. Okay, payment banks do not give loans. Then why they are supposed to maintain capital adequacy ratio? If you read the Basel guidelines, others, I'll just take 30 seconds, I'll come back to this question, don't worry. Whenever you talk about payment banks, no doubt the payment banks will not give loans. But is it okay if I say, under Basel, there are 3 types of risk which are faced by all the lenders or all the banking units? There are 3 types of risk. One is a credit risk, second one is the operational risk, third one is a systemic risk, right? Systemic. So one is a credit, second one is a market, third one is operational or systemic risk. No doubt payment banks will not face the first, but definitely yes, payment banks will face the second and third. That is the reason. That is the reason they will have to maintain capital adequacy ratio. Now come back to question number 10. Let's start. Question number 10. Consider the following statements regarding NDS-OM. My dear, please be very careful. This is my 3rd class and I see that many of the students will keep on asking me for the long form. I will tell in the classroom. I will tell you this in the classroom, but in the examination hall, who will tell you? And in UPSC, they might simply give you the short form, right? They expect you to know this. They will give you short form. What is this NDS-OM? negotiated dealing system order matching. In fact, if you check the question paper 2 years ago, there is a statement given based on NDS-OM itself. In the prelims, they had given this particular question on NDS-OM, only one statement. Again, I repeat, what is NDS-OM full form? Negotiated Dealing System Order Matching. It is called as NDS-OM. Let's look at the three statements now. Government securities, both the center as well as the states, are traded on the platform. Absolutely correct. Those who are wondering, this is a platform which has been set up by Reserve Bank of India. Initially, they had set up, right? Initially, they had set up only NDS, which was used as a primary market. Later, they changed it to NDS-OM, which is basically a secondary market now. Which is basically a secondary market. Secondary market means instruments are traded. Government bonds are traded in this particular market. Done? So, government securities, both of the center as well as the states, are tradable on the platform. Absolutely correct. Second one, NDS-OM was introduced by SEBI to promote bond trading. Wrong. First one is correct. Second one is wrong. Third one, only the institutional, right? Only the institutional investors are allowed to access NDS-OM and not the retail investors. Until very recently, it was not allowed. Until very recently, it was not allowed. But now RBI says, under certain circumstances, if you follow certain conditions, yes, you can also, that is retail investors can also get access to, right, the NDS-OM system. Is it okay? Right? Retail investors are allowed now. So, third statement is also wrong. So, question number 10, right option will be option A, only one is correct. Only one is correct. Is it okay? Can we go forward? Anybody has a doubt regarding this? Be very careful. Question number 11, consider the following statements regarding CCI. Very factual question. Very, very factual question. Why it was there in the newspaper. Okay. Competition Commission of India. EduTop, why 2 is wrong? My dear, this NDS-OM is introduced by Reserve Bank of India. RBI, Reserve Bank of India. That's the reason. Kunal Srivatsava, please explain NDS-OM function. My dear, it's a platform. It's basically a platform where, right, the trading of government bonds will take place. Simple, where the trading of the government bonds will take place. That's basically the use of NDS-OM. Okay, let's start. Right, a very, very simple question if you ask me. Right, why it was there in the current affairs, that's the reason I've picked up the question. Consider the following statements regarding Competition Commission of India. It is a statutory body. Yes, right, of course, yes, it is a statutory body. Okay, right, it was established with passage of Competition Commission Act of 2002. Over a period of time, the Competition Commission of India Act has been amended by the government, but no doubt it is basically, right, the statutory body. Second, CCI needs a quorum of 4 members. The composition is 1 plus 6. Please by heart this. Composition is 1 plus 6, and this was there in the newspaper very recently. You require 3 people. You require 3 people, right, to form a quorum. And until very recently, there was no quorum that was available in the Competition Commission of India. And that was the news. That created a lot of news. Government of India has appointed people. Now there is quorum available in the Competition Commission of India. So CCI needs a quorum of 4 members. Statement is wrong. It requires only 3 people. It takes up the cases related to anti-profiteering. Of course, yes. Starting 2022, please remember, starting 2022, Competition Commission of India has been asked to take up the cases of anti-profiteering. And what is the connection? Anti-profiteering, I hope you remember the concept of National Anti-Profiteering Authority. Please understand this carefully. Right? National Anti-Profiteering Authority. Under National Anti-Profiteering Authority, which was established by Government of India, that is under the GST as a concept, it had basically a sunset clause of 2 years. It was established in 2017. it was wound up very recently. It was established in 2017, had a sunset clause of 2 years, again extended by 2 years, again extended by 1 year, etc., etc. That is a precise reason National Anti-Profiting Authority has been wound up now, and we have basically transferred all these cases of anti-profiteering to Competition Commission of India. That's a the argument. Okay, so first statement is correct, second is wrong, third one is correct. Right option for question number 11 will be option B. Is it okay? Right option is option B here. Okay. Now this is the article. If you want to revise something, download this particular PPT as well as read those particular articles. Question number 12. Consider the following statements regarding NaBFID. NaBFID. Take 60 seconds, solve it, then I'll tell you what is the context why I'm asking you this particular question. What is ALM? ALM stands for Asset Liability Mismatch. ALM stands for Asset Liability Mismatch. Okay. NaBFID stands for National Bank for Financing Infrastructure Development. NaBFID. Okay. Okay, let's start. Consider the following statements regarding NaBFID. Okay, and by the way, 65% of you have chosen option B. Correct, by the way. 17% have chosen option A, 14% have chosen option C, and 2% have chosen option D. Okay, let's start. Consider the following statements regarding NaBFID. It is the only all India financial institution. Wrong. It is in fact the 5th all India financial institution. Right? We have NaBFID, we have Exim. Right? So there are many all India financial institution. So first one is wrong. Now what is this NaBFID? Please understand, NaBFID is basically a government owned entity. Government of India introduced a bill, NaBFID law, got it passed in the parliament, and then set up National Bank for Financing Infrastructure Development. And please understand, this is a type of development financial institution. DFI, Development Financial Institution, DFI. And what is the role of a DFI? Please understand this. DFI is not generally involved. It is not generally involved in collection of people's deposit, right, giving loans to people, etc. No, look at the name itself, Development Finance Institution. It will provide long-term loans and larger value loans for the development of infrastructure. For the development of infrastructure. Is it okay? It is the only, right, AIFI? Absolutely no, right? This is wrong. And by the way, AIFIs come under the regulation of RBI. They come under the regulation of Reserve Bank of India. It will help in addressing the issue of ALM in the commercial banking sector. Right? It will help, right, in addressing the issue of ALM in the commercial banking sector. What is this ALM issue? Listen to me very carefully, and precisely this was the reason why I have raised this particular question, why I have asked this question. Let's start. Here is a bank. Bank will collect a deposit of, let's say, 100 rupees FD, which is for 3 years. Is it okay? Step number 1. Bank will collect a deposit of 100 rupee FD of 3 years. Now, the bank will give a loan for development of infrastructure, and the loan will be issued, let's say, for 10 years. Loan will be issued, let's say, for 10 years. So now do let me know, is it okay? Please look at the numbers and do let me know, is it okay if I say the date of maturity or the period of maturity of asset of a bank is different compared to the date of maturity or the period of maturity of the loan of the bank? Is it okay? Liability has a shorter maturity period, whereas the asset has a larger maturity period or a bigger maturity period. This is called as asset liability mismatch. And the banking sector faces the issue of asset liability mismatch because they provide long-term loans for the development of infrastructure. Now you will ask me, sir, in that case, will the NaBFID face the same kind of issue? Please understand this. The DFIs, development finance institutions, generally borrow from the market for a longer duration. From whatever source they borrow, they will always prefer to borrow for a longer duration. Right? That is the reason why it will help them in overcoming this particular issue of asset liability mismatch. All of you okay with this? All of you okay? Right, so this is the newspaper article. NaBFID plans to raise $1 billion from multilateral agencies, and there itself you will get the answer to the third statement. It can raise funds either in rupees or foreign currencies. Yes. Can they borrow from the domestic market? Right? Can they borrow from the domestic market? Right? Yes. Can they borrow from the international market? Again, yes. Right? So definitely yes, third statement is correct. Second statement is also correct. All of you okay with this? Right? All of you okay? Right? So 2 and 3 are correct. Question number 12, right option will be option B. Option B will be the correct one. ALM stands for asset liability mismatch. For a bank, the deposits are liabilities. For a bank, loans are assets. Right? The duration of the loan is bigger compared to the deposit duration. This is called as asset liability mismatch. Done? Right? And by the way, if you're wondering, sir, what is the problem? Let it be different. Right? What is the problem? What is the problem in case of that? My dear, please understand this. If I'm a bank, I will give this particular loan to an infrastructure developer for 10 years. After 3 years, you will come to the bank, you want to withdraw money. Can there be issue in terms of liquidity in the banking sector? Think of it. Right? Can there be issue in terms of liquidity? Bank may not have sufficient amount of money to give you the amount back. That is one problem. And second one is, imagine when I collected the FD from you, the rate of interest was 6%. I offered you 6%. And after 3 years, you will come to me, you want to withdraw this particular 100 rupee. Now I'll collect this 100 rupee from one more depositor, but offer 7% rate of interest on the FD to that particular customer, because interest rates might have increased. So as a result of this, can I simply say the cost of the funds for the bank will start increasing because of this kind of a issue of asset liability mismatch. All of you okay? Please be very careful. Question number 13 now. Let's go to question number 13. Consider the following statements regarding priority sector lending. PSL, priority sector lending. Take 60 seconds. Right, solve the answer or solve the question. I'll discuss. It is slightly factual, right? Because it was there in the current affairs, I have given this. PSLC stands for Priority Sector Lending Certificate. PSLC stands for Priority Sector Lending Certificate. Poll has not been started, my dear. Poll is already live. Okay, let's start. Question number 13. Right, consider the following statements regarding priority sector lending. Okay, B, 59% of you have chosen B. By the way, B is correct. 28% for A, 9% for C, and 2% for D. Okay. PSL is a qualitative monetary policy tool. Straightforward, nothing is difficult here. It is correct. It is straightforward statement. The Reserve Bank of India's credit control tools or monetary policy tools are divided into two parts. One is quantitative, second one is qualitative. One is quantitative, second one is qualitative. Right, in case of qualitative, one of the tools that is used is basically PSL. Under rationing of credit, we use a PSL, okay? Private sector lending. So, first statement is correct. Second statement, banks falling short of the target may use the PSLCs to meet the targets. Definitely yes, this statement is correct. How so? Please understand this. If a bank is supposed to meet a PSL of, let's say, 75%, if a bank is supposed to meet a PSL of 40%, for whatever reason, let's say the bank is not an expert in agriculture loan, the bank is not an expert in giving educational loans. In such cases, the banks might simply, right, purchase the PSL certificates from another bank who have crossed the PSL target. Simple concept. All of you heard of green credits? Not in economics, but in, let's say, ecology and environment. Green credits. If one company is polluting more, it is not able to control the pollution, they can purchase the green credits from somebody else. Apply the same logic here. Apply the same logic. If a bank is not able to, meet this particular, right, let's say PSL targets, another bank might have met it, it has overshot it in fact. In such cases, right, basically the certificates will be purchased, and remember PSL certificates, every certificate will be issued valued 25 lakh rupees. 25 lakh rupees. So I will simply purchase the certificate from somebody else, another bank, and show to the RBI that I am able to meet the PSL target. This is very common. This is very common phenomenon in the banking sector. Okay. Third statement, it is the same for all the banks in India. It is the same for all the banks in India. Absolutely no. And this was the reason why I've picked up this particular question. Understand this carefully. All of you heard of urban cooperative banks? Do let me know. Urban cooperative banks, right? Listen to me carefully. Urban cooperative banks have been asked to meet the target of PSL 60%. Urban cooperative banks have been asked to meet a target of 60%. Some of you are saying 75%, 60%. For commercial banks, it is 40%. For commercial banks, it is 40%. For small finance banks, it is 75%. For regional rural banks, it is 75%. Is it okay? Right, so look at the third statement. It is the same for all the banks in India. No, it is not the same. It will keep on changing from one bank to another bank. All of you okay? All of you okay with this? So third statement is wrong, and again I am telling you this was precisely the reason why I have picked up this particular concept of PSL certificates. Please be very careful. Okay. So 1 is correct, 2 is correct. Right option for question number 13 will be option B now. Okay. Next one. Question number 14. Start. Which of the following measures are not undertaken by the central banker aiming to control inflation? Very straightforward. Right, be very careful. These kind of questions have been asked by UPSC. That's a reason. Read the statement very carefully. I know, right, the options are easy, but statement, read the question statement carefully. Okay. Let's start. Okay, let's start. Question number 14. Which of the following measures are not undertaken? Do not make a mistake that I did earlier. Read carefully. Okay. Which of the following measures are not undertaken by the central banker aiming to control inflation? I have given you 3 options. three options. You need to find out which of the three situations RBI will not use. Is it okay? First one, increase CRR. Right? If you want to control inflation, will you increase CRR? Of course, yes. You will use it. Is it okay? You will use it. Second one, reduce repo rate. If you want to control inflation, will you reduce the repo rate? No, you will not reduce the repo rate. You will in fact increase the repo rate. Done. Third one, sell government securities under open market operation. If RBI will sell government securities under OMO, can I simply say it will take out the liquidity, it will take out the excess money supplied in the market. That will reduce the money supply, it will help in controlling inflation. So you will use first one, you will use the second one to control inflation. You will not be using the second one. So the right option for this question will be option A, only one. Is it okay? Right option will be, right option A, only one is correct. Only one you will not be using. Let's go to the question number 15, the last one for today. With higher fiscal deficit, which of the following are likely to happen? Which of the following are likely to happen? Likely to happen. Poll is not there, my dear. Poll has been started. Please check it. Poll is already live. Okay, let's start. Question number 15. With a higher fiscal deficit, which of the following are likely to happen? Okay, first one, crowding out of the private sector. Crowding out of the private sector. What do you mean by crowding out? Simple. Fiscal deficit, if it increases, it means government is borrowing more money. Government borrows higher amount of money. And when government borrows higher amount of money, automatically what will happen? The demand for the money in the market increases. And when the demand increases, automatically the interest rates will start increasing. Simple. Interest rates will increase. And when the interest rate increases, private sector will not borrow more. Private sector will move away. Private sector will reduce its borrowing. This is called as crowding out. Is it okay? Crowding out. So crowding out of the private sector, yes, it is likely to happen. Okay. Second one, higher interest burden for the government. Of course, yes. Burden for the government in terms of payment of interest will increase, because if you borrow more, you'll have to pay interest. Right. So yes, interest burden for the government will increase. Definitely yes. Upgrading of sovereign credit rating. Upgrading of sovereign credit rating. No. If you borrow more money, if your FD is higher, if your public debt is higher, right, if your, let's say other indicators in the market, if these are not good, the sovereign credit rating will not be improved, rather it will be downgraded. Is it okay? Rather it will be downgraded, not upgraded. Is it okay? So upgrading of sovereign credit rating is not going to happen. So 1 and 2 are correct. Right option for this particular question will be option C, 1 and 2 only. All of you okay? Right, all of you okay? Right, so the right option for question number 15 will be option C here. Done? Anybody has a problem? Anybody has a problem? Please do let me know. Right, so these are the 15 questions that I wanted to discuss. Some of you are raising questions regarding question number 14. Let's solve it. Don't worry. Which of the following measures are not undertaken by the central banker aiming to control inflation? Right, you have certain, let's say, measures. RBI has certain measures. They will use the measures to control inflation. But the question is, which of the measures will not be used? If you are RBI governor, which of these measures you will not use if you want to control inflation? And many of you are saying, sir, point number 3, there is a doubt. Listen to me carefully. If you are RBI governor, think of it. You will sell the government securities to me, I will give you the government security, which means money supply in the economy increases. If the money supply in the economy increases, that will cause inflation. So you tell me, if you are the RBI governor at 9 o'clock, would you be doing this to control inflation? No, you will not be doing this to control inflation. Done? So which of the following measures are not used? Then I should change the option then. Correct, I should change the option. Increasing CRR, it will help in controlling inflation, correct. Reducing repo rate, it will promote inflation. It will promote inflation, definitely yes. Second one is wrong. Sell government securities under open market operation. If RBI will sell government securities under open market operation, it will contribute inflation, not controlling inflation. So you will not be using the third one. Correct one. So 14th is right. Correct. Anybody has a problem? 14th one, yes. You should not be doing, you should not reduce repo rate. That is correct. You should increase CRR. Selling G securities under OMO, that will contribute to inflation. So you should not be doing this. You should not be doing this. Okay. And again, please focus on the term not. Right. Please do not make a mistake that I did earlier. Right. I marked it wrongly. First question itself, I marked it wrongly. You please do not make a mistake. How selling G securities increases money supply. Okay. Okay. How selling G securities. If you are RBI governor, you will sell the G securities to me, I will give the money supply will come down. Money supply will come down, correct? Money supply will come down, and that will basically help, right? That will help in controlling inflation. So you will not be doing this. Anybody has a doubt? Do let me know. Sir, has RBI replaced reverse repo rate with a special deposit repository? Right, I hope you understand. Again, it's not special deposit repository, it is SDF. Right, standing deposit facility. Standing deposit facility. It is not special depository repository, it is standing deposit facility. Sir, you are marking incorrectly. Okay, focus now, focus. You should not follow this. You should not be undertaking this, right, to control inflation. So first one, increasing CRR. If you want to control inflation, will you take CRR? Will you increase CRR? Do let me know. If you increase the CRR, will it help in controlling inflation? Yes, it will help in controlling inflation. Right, so you will take this. You will take the first step. You will not take the, you will not ignore it, you will take it. Second one, reduce repo rate. Reduce repo rate. If repo rate is reduced, it increases money supply. It increases money supply. You should not take it. You should not take it. Third one, selling G securities under OMO. If you sell G securities under OMO, it will reduce, if you sell the G securities under OMO, it will reduce money supply. So you should take it. Is it okay? You should take it. You should take the third step as well. Right, but the question says, which of the following steps will not be undertaken? At least now, is it clear? Do let me know. At least now, is it clear? I am looking in the comment section. Which of the following are not undertaken? Even third statement will reduce money supply. My dear, you should take it. That's what I am saying. If you want to control inflation, you will take the third step. Correct or not? Forget about everything else. If you want to control inflation, will you take the third step? Yes, you will take it. It will reduce money supply. But the question is, which of the following should not be undertaken? Should not be undertaken. Right? So, obviously, second one should not be undertaken. Done? Okay. बस कीजिए वरना confuse हो जाएंगे. Okay. Done. Okay, done. I'll stop the discussion. But before I wind up, couple of very important points. Rajat Sharma yesterday had raised a doubt in the comment section. Sir, external debt is maintained by whom? Ministry of Finance. I've already told you. Ministry of Finance. Okay, first one. There was one more comment. Sir, what is pro-cyclical and counter-cyclical? What is pro-cyclical and counter-cyclical? Listen to me very carefully. Pro-cyclical means, right? Pro-cyclical basically means the policy of government which will be reducing the intensity of event in the economy. All of you okay? I'll repeat the statement. I will repeat the statement. The policy of the government which will reduce the intensity of the event that is happening in the economy. I'm sorry, that is counter-cyclical. It is called as counter-cyclical. Pro-cyclical means the policy of the government which will increase the intensity of the event which is happening in the economy. For example, listen to me now. If there is a high growth phase, basically if government is investing more money, already the investment is higher. If government is investing more money, don't you think this will contribute to higher growth again? Is it okay? It will contribute to higher growth. Investment is already high from the private sector. Government will also invest more money. That will lead to higher growth, higher demand, right? Excess inflation rate might also happen. This is pro-cyclical. Pro-cyclical. Counter means, right? Counter means exactly opposite. Reduce the intensity. Reduce the intensity. All of you just please wait, right? Yesterday I want to make a correction in one of the question. Please wait, okay? Do not, right, quit the session as of now. Counter means reduce the intensity. Reduce the intensity of the event that is taking place in the economy. For example, if growth is very high, demand is very high, government will impose more taxes and collect more taxes from you, thereby reducing the demand in the market. Can I call this as a counter-cyclical? Is it okay? Can I call this as a counter-cyclical? Right, so reducing the intensity is called as counter-cyclical, increasing the intensity is called as pro-cyclical. Done? Okay, the question that I'm talking about is basically this question. Many of you have sent a mail to me. Many of you have commented in the YouTube video, etc. Let me clear the air. Let me clear the air. Right, consider the following statements. The value of the money increases during deflation and disinflation. Many of you basically have commented saying that, sir, it is not this way, that way, etc. Actually, what I wanted to ask, it was a mistake from my side. I repeat, it was a mistake from my side. What I wanted to ask was this statement. The value of money increases during deflation and disinflation compared to the period of high inflation. I wanted to ask this statement. By mistake, I have pasted this statement. So you people are right. During disinflation, if you simply said disinflation, will the money value increase? No, during disinflation, money value does not increase. But actually, again, I am repeating my mistake. I should have asked this statement. I wanted to ask this statement. I was explaining the same statement, but right, the statement that was present in the PPT was basically wrong. My mistake, right? I'll accept that. The value of money increases during deflation and disinflation compared to the period of high inflation. Yes, yes, right? This statement is correct. But if you simply say during disinflation, right, definitely yes, money value will not increase, it will decrease. Is it okay? Is it okay? Now there was one more student who was complaining that I'm not addressing the question raised by that student. ALM, asset liability mismatch. Asset liability mismatch. Right, what is this idea of asset liability mismatch? Listen to me carefully. The bank has collected certain, right, let's say liabilities, that is deposits. The bank has collected deposits, correct? That is liability for a bank. Now the bank will use the deposit to issue loans, to give loans in the market. To give loans in the market, let's say the loans which are issued have a duration of 10 years. Now the asset has a duration of 10 years. The loan has a, asset that is a loan has a 10-year duration, and second one is the liability has a duration of 3 years. So is it okay? The duration of assets and liabilities are both of them are different, and the asset has a longer tenure, loan has, the liability has a lesser tenure. This is basically the concept of asset liability mismatch. Done? Okay, right? All of you okay? So any other doubts? Okay, some of you asked a question regarding REIT and Infrastructure Investment Trust. REIT and Infrastructure Investment Trust. I'll discuss that. I've made questions, right? Attend the tomorrow session as well as the marathon session. You will come across the questions on Infrastructure Investment Trust as well as REITs. Okay, gender budgeting. Right, there was a very interesting question that I asked yesterday, gender budgeting. Okay, I asked you, the government of India set up a committee. Okay, the government of India has set up a committee regarding gender budgeting and asked you what is the name of the committee. Most of you have written in the comment section the name of the committee which was set up 10 years ago. Name of the committee which was set up 10 years ago, my dear, I would recommend please go through this particular article. Go through this particular article, you will see that the name of the committee that was actually referring to is different. It is a Dakshita Das Committee. Dakshita Das Committee. So please go through this particular article, you will realize that whatever name you have written, whatever name of the committee that you have written, it is a very, very old committee. 10 years ago. This is the latest committee, Dakshita Das Committee. So please be very careful. Okay, done? Right, some of you are asking first statement of the first question. Let me see what is the first statement of the first question. Okay. Okay, rising forex reserves held by RBI. Very simple. Dollars will flow into India. Okay, dollars will flow into India. That will basically lead to higher supply of dollars. Now, when the dollar supply increases, what RBI does is basically RBI, in order to control the value of appreciation of rupee, will sell rupees in the market and instead will purchase the dollars from the market. Very simple. They will sell rupees from the market and purchase dollars from the market. And when RBI purchases the dollars, automatically the forex reserves held by RBI will start increasing. Is it okay? It will start increasing. Done? So these are some of the questions which were asked yesterday. I have addressed it. If you still have any kind of a doubt, please do let me know. Right? Please do attend tomorrow's session as well as day after tomorrow's session. Okay? Tomorrow's session as well as day after tomorrow. Lot of concepts I'm supposed to discuss. I'll discuss. Right? There is a marathon session day after tomorrow. Please attend that particular marathon session as well. We will be taking a lot of questions from current affairs from all the different areas which are yet to be covered. We will be taking lot of issues and discussing these issues. Done? Before I wind up, very important announcement. If you like these initiatives, if you feel that this is helping you in one or the other way, one, please share these videos with your friends. Let them also get the information. Let them also learn certain important concepts not only in economy as well as other areas. And more importantly, please hit the like button. Provide your valuable comments in the section below, not in the chat section, in the comment section after the class is over. And do not forget to subscribe to our YouTube channel. Thank you. Have a great day. Good night.